All right, good morning once again, everyone. Thank you for being with us on this Friday, August 14th, 2026. This is our audio edition daily trade strategy briefing and NFA compliance rule 2-29C, as you all are familiar with the risks associated with trading. All right, get that out of the way. Today is a cycle day 3, and we do have a positive 3-day cycle. So that just continues to crank up the statistic. We're roughly around the 93% successful positive cycles. Though overnight, markets are consolidating very quietly up near the all-time high up here. Put in yesterday at 78.38. So kind of a slow, quiet evening. Today's line in the sand is 78.10. Simply which match the last transition level yesterday between this downdraft, which found then support, reversal, and then held. All right, so that's how I chose the line in the sand this morning. Everybody see that on their own charts. All right, so we had that during the day yesterday. We had the push up and the reversal and the push down, found support at 78, reversal back up on the 60-minute, and then on the subsequent 2 60-minute periods, the retracements on the during those time periods held the 78.10. Okay, so again, part of what I am going to try to attempt to do is give you some of the rationale in terms of why I selected certain levels for, particularly for a line in the sand, right? But the basic premise of that is we're looking for how prices react at certain stages throughout the day, and if there's some sort of a transition level. Okay, so from a kind of a bearish kind of condition to a bullish condition, and that's kind of what we had here. Even though we had the big move up early on, we got the retracement back down, found support. Okay, and then that's all well and good to that point. So at that point, dynamically, okay, you say that's a line in the sand, right? Dynamically. So prices come down, they find a low, bounce back up, maybe some retests during that 60 minutes period, and then the 7800 holds, and then it starts moving back up. At that point in time, intraday, you can make a strong inference. You can infer that that 7800 zone, plus again, plus or minus 5, all right? But that for 7800 zone can be marked intraday as a dynamic line in the sand. As the rest of the day unfolded, right, as I just mentioned, it continued to go higher. But then there were a number of different attempts at the 7810s that proved that 7810s was valid for a dynamic line in the sand at the time. Does that all make sense to everybody? And then, of course, into the close, you got the rest of the move up. So when I looked at the activity last evening for today, again, I'm simply asking the basic question about where the market transitioned, where did it find some resistance, where did it transition to support intraday, what area could we mark for that, and that level today became 78.10s. You can do this also. Also, there was some high volume node in that vicinity. So again, another reason why that area became more important. Okay, so during the overnight, clearly you can see we didn't move down below that level, stayed right around the 78.20s, and then we've moved up here to about the 30s. I think my first target this morning or for today is 35s, pretty much up into this kind of high volume node area over here. Okay, so as a first target, and then subsequent targets, on new pushes higher to again additional all-time highs if the market wants to do that. All right, that makes sense to everybody. So again, I'm trying to give you some rationale as to how I'm selecting various levels. I get that question quite often. It is not a mathematical formula in any way, although I will say as a default, you can always use the prior close. But that would be too easy, right? I'll just use the prior close. That doesn't always match what a true line in the sand would be. A true line in the sand, the way I was taught back in the day, was an inflection point between buyers and sellers. And again, the whole premise of a line in the sand is bullish above, bearish below. So by natural inference, a line in the sand should be a level or a zone, an area where buyers and sellers, bulls and bears, battled it out for a bit, and one side successfully took control. And so that is the 78 line in the sand. Others may use different approaches. That's what makes the world go round. This is essentially how I was taught, and I think it's pretty served us pretty well over the years. So we'll continue kind of with that. Sometimes it's not as clear, perhaps, as yesterday's movement. Other times it's very clear. So we put our best foot forward, try to estimate where a transition would be for today's session. So that's how we have it. So starting the day, obviously in bullish mode, up near all-time highs. Of course, it is Friday, so capital preservation Friday. All right, but if you've had a good week, pare it back. If you haven't had such a good week, don't push it. Let the market naturally unfold, and you'll get your opportunities. All right. So yeah, so we'll just be flexible to the action. I am out of here at noon. I will leave the charts up online for the diehards in the afternoon, but again, as I posted up earlier, I'm a bit fried. I've had a busy week with many things going on, and I don't have a whole lot of bandwidth left. And when that happens, when I get tired and I get kind of, in a sense, kind of a little burnt out, it's very easy to make an unforced error, isn't it? How many times have you made unforced errors? And when you look back, and a lot of times it's because it's a level of exhaustion sets in, and so you need to recharge the batteries. So I'm going to be out of here at noontime. But we'll continue on for the morning session. Anybody have any questions, comments, considerations? How's everybody doing as a whole? I've gotten a fair amount of anyways, of feedback from the community regarding kind of the recent activity of how I'm presenting in the morning, kind of outlining a little bit. Again, one of my goals here, and actually my wife put it, fairly succinctly this morning. We were talking about, because she was listening to, what she listens to what I say during the day when she passes by. But we were talking about it a little bit, and one of the things that I'm trying to convey with my presentations and the way I'm conducting them is to help you think like a trader. Right? Many of you are from different, walks of life, but thinking like a trader is nothing like what your normal thought process is to survive, life out there. All right, life in the trading world is really different, and we have to think like traders, and it's not necessarily the way we would necessarily think outside of trading. So it's kind of a form of critical thinking, my wife's term, kind of a form of critical thinking, trying to train yourself to think in a certain way. We talked a little bit about the isolation approach, which is a new term for us. If you missed yesterday's session, you want to review, that format about the isolation approach, be sure to revisit yesterday's conversation in the morning about that. Okay, so it does take some time, yes, to reprogram the thought process. It does take some time. So I'll do my best to continue that. What helps quite a bit with that, by the way, is if you have questions or something is not clear, I'll take the time to see if I can clarify whatever I can at the appropriate time. Again, if you have trades going on or there's an opportunity there, again, first and foremost, right, trading is number one. We don't want to miss opportunities. And then we'll address any questions or topics that you guys want. So if you do have anything that you want to put on the docket, again, you can send me emails and say, hey, I'd like a little bit more clarification in this area. And again, we'll make sure we address it. Okay, fair enough? All right. Again, kind of a neutral start today. Again, we do have a positive 3-day cycle. So if we get below the, recent lows, the 20s down through the 10s, we may need to reassess. But we're really still looking for, a level of acceptance at these higher levels near the all-time highs. So dips are still viable, but again, I will always say now, stay in alignment. Which has served us well. All right, let's have a super morning. And we'll take it from there. We'll kick it off. And away we go. All right. So let the market unfold. We'll outline our sandbox. And you can see probably very clearly what our sandbox is so far to start the session, right? I mean, it's just simply, again, we got a tight area. Very well defined, balanced pattern at the moment. Retest of the early low pivot there underneath the value low, right? Volume drops off pretty quickly, so retest and then a little quick bounce back up. Start recognizing these type patterns too, right? So when you have like a balanced area like this, right? So 70%, right? 15 and 15, right? So prices enter this low edge. At least the initial expectation is to rotate back towards the middle, vice versa, up above, rotate back towards the middle, until there's influence, a directional influence one way or the other. We'll never know exactly when that's going to be, but that's the idea. So again, that's kind of the idea of being able to recognize, what type of distribution pattern is underway. You should all familiarize yourself with those type of patterns. Okay. And sorry about that, guys. I just blew everybody off. Hold on a second. I blew everybody off. 1 second. No more charts. That was my mistake. See? Unforced errors. 1 second. All right, chart should be back. Looks nice. Yeah. Well, that's hard. Yeah. Well, yeah, that's fine. It provides contrast. Yeah. It provides contrast. It looks nice. I don't even know how much this coin is worth. 1893. Huh? Yeah. Let's see how much it's worth. Guys, if you're interested, little profile education there. There's a link from a website that describes various profile types. So if you're interested in that, there's an educational link for you. There's quite a bit of free educational stuff out on the website, out on the the internet about profiles. It's really why I don't really teach it or anything. There's plenty of good stuff out there. Okay, let's refocus. So market's kind of trying to work its way lower here. Go to this. All right, so opening range is in place. 21s up through 28s. See how the market wants to break one way or the other. So again, what you want to do here, you see how the within the context of this zone, right? The market kind of broke through the 89 here, so it went down and then came back up. Basically, you can kind of draw that kind of halfway mark there, right around the 26s or so, plus or minus. Even though we're kind of in the range, you still want to frame it out. Right now you frame it out a little bit wider here because we got a lower low, but frame it out and see where kind of roughly the midpoint is. Right, so again, frame things out. I would highly recommend, again, if you want, this is called Epic Pen, right? If you wanted to go on something like that and get this type of a pen to draw things out for yourself. I'm doing it, for the group here. Or you can just simply, draw horizontal lines and zones and put some text on if you don't want to have a pen like that. Sometimes it's easy to write some text. I'm getting better at writing text with a mouse. At first I couldn't do it. I'm getting much better at it. Just a learned skill. All right. Where do we go? So if we're looking for a short play, we currently have that configuration on our side at the moment, right? 25s, 26s, right? So again, kind of a dynamic line in the sand right now. So if you're looking for shorts, we get a bounce back up into this area near to the 89 around here. We're looking for a move back down, kind of draw it out. If it turns as though that the market, pushes up, back up through here, which is certainly, a scenario, right? And the EMAs begin to shift. See how I'm kind of drawing it out? That's the idea about using a pen like this. You can kind of draw out scenarios for yourself. All right. And then we would look for a move and then a come back down and a hold. So you can kind of draw out these type of scenarios. That's what's good about using a little pen like that. And what that does is it helps reinforce just what a scenario would potentially look like. Draw it out. Just like you're an 8-year-old with crayons. Draw it out. BLT was the horizontal line. Okay, yeah, 26s. Yep. Right. Or, law of alternating pivots. Right. Support here, resistance there. However way you want to describe it. Again, even if you don't have a trade, the idea is to train your mind. This is what we're trying to do here, even before a trade. Train your mind to see these things. Describe them to yourself. Write notes about them. Do not trust your mind to remember it. Anybody have a perfect memory? Do not trust your mind to remember things. Make notes, draw pictures. You will then remember them much, much more readily. All right, right back up into the mid. So what I'm really looking for the market to do to try to get a bit more of an actionable trade out of this, right, is to one, try to clear, value high, okay, stay above value high, and then watch some of the volume, blossom at the upper edge, right? That would tell us that the buyers are getting more aggressive and they want to push, right, for higher ground, right, ground. Right now, there's little volume pushing up into the high, little volume pushing up into the low. You can see how it tapers off. So that would be a scenario to the upside. Same thing as scenario to the downside. Now this did break down through a little bit of the value low, but there was very little volume, associated with that underneath, right? So again, in order to get kind of a breakout move, you need to have increasing volume. And it's the increasing volume that tells us that in this case, to the upside, the buyers are getting aggressive. And they're willing to pay higher prices. Not only that, they're willing to buy increasing volume. Does that make sense to everybody? Understand those type of concepts. When the market moves higher into a higher ground and the volume just kind of dissipates, there's not a lot of interest. Even though it traded up there, not a lot of interest. So that's kind of the footprints, kind of the patterns that you want to see, want to look for. And it's not predictive. We have to recognize, we have to see it happen. That's why I've always said this is not a prediction game. It's understanding patterns that unfold. Let the market show us what it wants to do, and then we'll tag along. Right, so in the meantime, it's still relatively neutral. All right, so neutral balanced opening sequence. I don't know how well the Epic Pen freebie is. I just purchased it. It's relatively inexpensive. I don't know about the freebie version. Right? Again, recognize the patterns that are happening, right? So we got up to the value high. Look what happened. The volume just, again, you can look at the order flow if you want, right? This is another way of looking at this. looking at the order flow here, right? Price just kind of died right up at the top there. There was not a lot of, stop the shaking here. There's not a lot of, activity there, all right? Obviously some activity, but not a lot of activity. What you want to see is on order flow, right? You want to see persistent buying on the ask the offering side of the market. Does everybody see that? This is again another one where you can utilize order flow at particular inflection points to validate whether or not there's a potential for the market to move directionally. And in this case, you can see right here, right? And right here, there's nothing. Relatively speaking, there's nothing of size. Raise your hands if you see it. Come on. I want to make sure you guys seeing this stuff as I explain it, so you understand what to be looking for. Otherwise, I don't know whether you're getting it. All right, Mr. Fogelston, Mr. F. All right, thanks, Bruce. All right. So again, knowing what to repeat, por favor. You got to be listening there, bro. What I'm saying is, for looking for the market prices pushed up to value high here, right? In order for the market to break higher, we're looking for increasing volume, no? So one way to look at it is we'd look at the order flow at that inflection point, which is value high, or in this case, even opening range high, but it's the same kind of level. We want to see increasing volume on the buy side, right, or on the offering side of the market, where buyers are, Pac-Man, right? Buy, 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 buy. I'm not seeing that here. So what happened in the price? It auctioned there, but the buyers were not really aggressive there. And what happened? Prices rolled back. So again, the idea is, if you're looking for a breakout, you want increasing volume. So you need to see at these highs, what's the volume? Right? You need to see increasing volume. If you don't, there's going to be some volume naturally. You want to see increasing volume and persistency of increasing volume. That then tells us what? That the buyers are really wanting to push it higher. But if you do not see that, all right, the potential for failure and a reversal back into the range from the upper edge of the range increases. That's kind of when you're looking at order flow at inflection points can be helpful. I don't look at order flow all day long. That's like looking at the one-armed bandit. I look at it at particular junctures, right? That can help us in the read of what to do, or at least for nothing more in the read, increase our ability to read it. All right. All right. In the meantime, that push up and then rotate back down. We do have an A4. All right, short here. All right, with an initial scale, all within the range, but still. And that's another thing here, right? So if you see something like that, and oops, if you see something like that, and we're not getting any real, value out of it, all right, push, then you may want to play, a short probe. Again, just throwing it out there for everybody, right? We're just bouncing back and forth here between the upper and lower edge of the range. So I don't have a position on except for the auto X here. All right, so I got 2 take profit out on the auto. Um, but manually I don't have anything at the moment. All right, so 2 take profits on that, a scratch on the balance of the position. So for the most part, it's probably a scratch. You know, that A4 again, not surprisingly, given the pattern and rhythm. So again, be patient. If you're a breakout, looking for a breakout first pullback, you do not have it yet. First half hour, not much. Not much on the bone. Not much meat on the bone. I don't know. Do the algorithms get tired? I don't think so. Also, you know, the second half here of August, you are all aware that the second half of August is probably the biggest vacation period of the year. Portfolio managers, traders, analysts, that whole group. So the concept that Danny Riley likes to say is thin to win. I mean, prices at, you know, all-time highs. What do the big institutional players really need to do at this point? Not a whole lot, right? Hang out a bid below the market in case there's a break. For those that are looking to, you know, rotate from group to group, right? So they may be, you know, light sellers on lifts. There will certainly be activity for us. It's just the backdrop is just be aware this is, it tends to be a big vacation time. And when there's lowered participation from the institutional community, right, the mutual funds, etc., the algorithms run wild, right? The day trading algorithms, we're not the only day traders, by the way. Retail, there are plenty of day traders that use algorithmic programs, hedge funds, those type of guys, fast money guys, as they call them. Of course, the market makers do. You got to know the environment you're trading in. No need to be fearful. There's nothing to fear. Just be aware. You got Michigan sentiment data here coming out in a minute and a half or so. Just be aware of that. Can be a market mover. Again, fair warned is forearmed, right? Or forearm, whatever that thing is. All right, let's see if they can push this this time. All right, still rotational back and forth. Let's see if they can push this time. Or is it another fake out for the breakout? Yeah, University of Michigan is out. Basically in line, slightly less. I don't know how they read it. All right, not really getting anything, folks, right? Little probe against the high once again. Again, take a look at the volume. Everybody see what I'm talking about, right? Trying to teach you, trying to learn, try to teach you to learn how to see the differences, right? Again, another push up, right? Above the value high, another push up right here. And look at this. There's really no volume. I mean, there is volume, but there's no volume where, you know, it's a sustainable bid and they really want to buy it. All right. So make that note. Even make a note at this time of the day, 10:11, August 14th. Put it on your notebook to review this section of the recording where we talk about volume necessary for clean breakouts.
First pullback, take trade. Purple 5. Cycle lower.
All right, no breakout. Again, for reasons cited.
Cycle lower.
Still sitting essentially flat right now. Again, in my discretionary accounts. I see, the auto X's on there, but not really interested in them. Remember, the auto X's are just going to click off, as it's designed. Um, if you are utilizing the auto X's, all right, just understand the limitations of them. When prices are in range bound conditions, they do not perform well. So understand, why you're using an auto X and under what conditions to be using an auto X. Right? You have the ability to enable and disable the auto X's. All right, so you have the full control of turning them on off in the appropriate times. I leave them running as for demonstration purposes only. I think everybody does understand that, but it's good to repeat it. These for demonstration purposes only. They're not necessarily reflective of an active account.
Yes, bear stacker. Yes, bear stacker.
So understand the conditions that you're using them under. John, is that a reoccurring fee per month? I think I paid a one-time charge. I think I paid a one-time charge, if I recall.
Yes, HDR bear shift. Cycle lower.
Oh, okay. Gotcha.
Yes, bear stacker.
You have a selection of $2 a month or oh, it's charged annually. Okay, so $2 a month. Got it. Okay. I mean, it's worth it for me.
Yes, bear
Okay, it's worth it for me to, as I'm demonstrating and from the educational side.
cycle lower.
Yeah, we get an A10 here, Steve. I'm telling you, it's been on vacation. I don't know where it's going to happen today. I think it still might be at the beach. But this sucker's been on freaking vacation this month, hasn't it?
Cycle low alert.
Let's see it. Let's see if we get something here. Again, this is the lower edge. Maybe we get it. Maybe we get a shot back up. But it has not performed well this month. It has been disappointing, no question. You know, it's with the A10, it has its runs, you know. It does, both, you know, positive and negative, but it's the rhythms of the market that really matter with it, right? So these rhythms recently are just not, you know, occasionally we'll get a winner here and there, but it's just not a conducive rhythmic period of the market that the A10 really responds well in, right? But there are times where the rhythms are, you know, really frisky rhythms, and it you know, the A10's like, wow, you know, like it can't do any wrong. It like hits almost, you know, a high percentage of the time. Not lately. All right, it's just the way these things run. You know, that they're not the, you know, they're not the holy. None of this stuff is the holy grail. You know, I wish it were, but it's not. You know, it all has to do with the rhythms and stuff. Again, I will say this, and I will say this till I'm blue in the face. Okay, I probably already am blue in the face. The first pullback following a shift is still the highest percentage play and offers you solid opportunities. But yeah, you know, they all go through their periods. That's all I can tell you. I make no qualms about anything here. Yeah. Last year, yeah, so Dan keeps a lot of the stats for us, right? So I appreciate Dan's work. All right, Dan keeps a lot of the stats. Again, he's just mentioning he had 9 week negative. He had a 9 week negative expectancy run last year. 9 weeks. All right, and then right, only to get a December. Dan, you may want to post that. Right, and then a December to March run that like it could do no wrong. Right, so you know that's one of the things. If you're running any strategy, you're going to have periods of, you know, underperformance. But again, the key to the strategies are what time was the night, um last October through November. Now again, it didn't have losses every trade, but it had a negative expectancy, right, during that time period. Not every trade lost, but the expectancy of it was a negative expectancy. Yeah, okay. And then from December through March, it totally flipped. But what's the key to all this? When it's going through a negative expectancy, okay, wait, the unfortunate part is this. Everybody, as soon as it's going through a negative expectancy, what do people typically do? Stop trading it. The problem there is that you don't ever know when it's going to go back to positive expectancy. So you tend to get the negatives, and then now you're not there for the positives, and that happens to everyone. Thank you, Dan. All right, that's what happens to everyone with this stuff. So how to survive this stuff He's just going to keep those losses small and under control. And when you get the winners, you gotta milk the winners, right? You need to get the expectancy, right? The average trade win greater than the average trade loss. Most people don't really understand that. We'll try to work on that more in the coming months to get a full understanding of that. Yeah, we're getting a little bit more volume here. A little, again, right? So we're getting a little bit of a pump out in volume here. Now we're not getting a response, are we? Right? Before we were getting responses. Now we're staying below. So yes, they're trying to push lower now. Look at the difference. Look at the sellers. See the persistency of the sellers now on the order flow? Everybody raise their hand. So you see how it's changing, the persistency of the order flow. And of course, you do see bid-ask volume, ratio here as well, but showing you in different formats. There's a persistency of order flow. That's kind of what helps determine, whether the market is going to, continue in that direction. We didn't get that to the upside. We're getting it more to the downside. Okay, market's trying to find its directional move. It wants to go lower. I'm not fighting it. We'll probably get stopped out on this A10 in a moment. We're just about in the moment about getting stopped out.
Purple high. Cycle low alert.
Yeah, there's your stop out. All right, we expected that. I mean, we could just see it. You know.
ES bear stacker.
All right, down to the 14s again. What's our line in the sand today of the 10s? Hmm.
Purple high.
All right. Yeah, down go Frazier. Steve, you short? Come on, Frazier. You're what? Steve 9, you short? Shorts are the good ones now. All right. All right, coming down to the line in the sand. Let's see if that does anything. John B says, yeah, July for me was a negative all month, minus 10R at one point. Yeah, until the last couple of days where 2 times trades got me back to plus 1R. See, right? I had that thought maybe stop trading for a month. Lucky I didn't. That's the thing, John. Good. Thank you for the input there, right? That's the thing. You go through these draw periods, but the patterns, the signals, have worked, right? And it's just a matter of the rhythms a lot of times. So if you work your way, sometimes you just got to work your way up, be persistent, right? Work your way back. As hard as it is, it can be very hard. You minus 10R, right? I mean that's not fun, right? But now I bet, John, that you build confidence back by sticking with it, right? And you're back to 1R. That's where you earn your medal. That's where you earn the stripes. You don't earn your stripes in the easy times, right? You don't learn to lift weights and not get calluses. You actually learn more, be honest with you. You learn more from the negative months and the negative periods than you do with the positives. It's just naturally you learn more. You know why? It cuts deeper. And because it cuts deeper, all right, it's simply a deeper impression mentally, psychologically, emotionally, right? It's a deeper impression. But when you are able to be resilient and recoup, again, that's where you learn to be, you're learning more that you'll be able to carry forward with you in the future. It's really key. Good job. Good job.
Cycle low alert.
Right. So I'll say good job, John B. Woohoo. Yeah. All right. Very good. All right. So we'll continue on. Now, just one final note. You see, we were talking about, right, where we got a hump in volume. Notice what happened since then, right? Guys, I'm telling you, you got to understand how breakouts happen, particularly from balanced areas. You have to wait for the evidence. I know everybody would want to get in at higher prices. It's not about getting in at higher prices. It's getting in when the balance of supply and demand has shifted. And you can see that shift. I'm trying to teach you how do I recognize that shift. Here it is right here. All right. I think I have a very good graphic of that, by the way, that I can, if I can find it. If I can find it, I'll post it. Even if you are not in a trade, every day you need to take away some educational value out of what I'm offering on a daily basis. And the market is the best teacher or example creator for us, real time. But we need to have an understanding of
Turbo cell.
All right. I am going to show you. Want a little breakout lesson?
First pullback, take trade.
All right. So everybody, if you want, understand what I've talked about, right? So far. Okay. So let's talk about this. All right. I'm going to put up a graph here, a chart. Everybody see that clearly? Should all see that fairly clearly. I will give you this in a moment, but I want to go over it. Okay, I don't think I can use my little pen. No, I guess I can't. So if you look on the left side, what type of profile do we have? I would like everybody to answer where they can. What type of profile do we have on the left-hand side? We have a delta-shaped profile, the balance-shaped profile. This is exactly what we have today. Okay, good. We have a balanced shaped profile today where we were bouncing back and forth between the value area high and the value area low. What did I say about looking for a breakout in a direction? We would be looking for increasing volume. So there you go, right? We get in this case, right? Let's just say, let's talk to the upside first, right? Because there were several attempts to the upside that we noted that there was no volume associated with it. Persistent volume, directional persistent volume. There's always some volume. I'm talking about persistent directional volume. There was none to speak of. We highlighted that. Be sure to review this particular day's video about this. You will learn a lot, and they'll be able to carry that forward. So it failed to break out, and then prices rotate back through the range, now back to the other side where it attempts to move lower. What happened this case where price was moving lower? Now we got to push below the value low. It stalled a little bit. In other words, it didn't bounce back up into the range above the value low. It didn't reclaim it. And what happened during that period where it broke down through? It started building some volume, a high volume node. We're going to show that in a moment with the real charts. I just wanted to expand this out a bit. So today, okay, we have a balanced delta-shaped profile. So we want to focus on this type of activity today. And that's how we see and we can validate whether a breakout from balance is valid. We need to see increasing volume. We need to say persistency of that directional volume pressure. Sometimes we get a bounce back to the value low. Today we did not. It just stayed down. But again, remember what I've always said. Minor bounces or lateral movements after a break are or is momentum. Shallow pullbacks. Expect further movement in the direction. These are all core lessons you should all be understanding and absorbing and working into your repertoire. Okay? Now, in other days, there will be a B-shaped profile, a Bravo shaped profile or a Papa P shaped profile. We don't have that today, but I will give you this screenshot, put it in your work, review it, because there will be days where we have a P-shaped profile or a B-shaped profile. And the term here where it says PBT, that stands for price balance target. What does that mean? That means if we take a P Papa shaped profile, you see how it kind of truncated here at the high. It's called a poor high. Okay. If we were to get that to a D shaped profile, a delta shaped profile, like the one on the left, all right, it would be drawn out such that it would look like a D-shaped profile. So that target, the PBT, would be the end point of the delta-shaped profile to the upside. Okay, and then vice versa for a Bravo-shaped profile, the PBT, price balance target, would be to the downside. The goal on a Bravo or a Papa shaped profile is to develop into a delta shaped profile. Is that clear for everybody? That is about as much as I'm going to offer for profile education, because this is what matters. Understanding the concepts here will take you much, much further using profiles or developing profiles than probably anything else. This is an example, Freddie, of various shapes of profiles and how to trade them, what the inferences of the developing natures of them. Okay, so when we go back here for a moment, okay, and we take a look at what I outlined here. So let's take a look at that delta shaped profile. Okay, let's kind of go over here. So we had our delta shaped profile and the price broke down through it here. We saw over here on the right hand side, we saw our increasing volume node. What does that look like over here on the example sheet? Okay, increasing volume node. You see that on the right hand side there. Price stalled out for a few minutes and then it continued on lower. A volume node is a high node. Yes, it is used. That's a node, HVN, high volume node. It could be intraday, it could be daily, all time frames. It is universal time frames. We are trading intraday, so we're looking at the intraday volume profile. Okay, on the far right. That's why we have the profile. Profile gives us information about the distribution of price action. It gives us a wealth of information if we know how to read it. And again, what I'm trying to offer is insights into how to read this. I'm trying to give you a shortcut approach. If you want to read about volume profile and you want to learn all the aspects of volume or market profile, again, go into the resource sections of our website, and I have core resources about that. All right, written by James Dalton, Markets and Profile. If you really want to get involved in it in a deeper way, I don't think that's necessary in order to learn how to trade what volume profiles are showing us. But you can certainly go that if you're energized. What you want to understand is these patterns. The greater you can understand these patterns, the more you'll start, absorbing what the potential is. And again, as I was explaining this morning about the volume to the upside where we saw no volume, that's what I'm looking for. I'm looking for that volume peak. We didn't get that. We rotated lower, and yes, we got it to the downside, right? So you over here to the right, 78.18 actually, you can see right there that there's a little pump up of volume. Well, that's the same as what we're highlighting here on the example, right, of a high volume node. What does that infer? Yes, there were some buyers there because the volume increased, but the sellers were dominant. They sold it down, they encountered buyers, and what did they do? Did they back away, or did they continue? They continued. Okay, you want to buy them, Freddie? I'll sell you more. Freddie, how many more you want to buy? I'll sell you more. John, you're a buyer too? Okay, how many you want? Okay, I'll sell you more. David's a seller. All right, Ram steps in and says, nope, I'm not buying them. Or says, hey, I'm going along with David. I'll sell some to Freddie too. So sellers become persistent until the buyers get filled, and then it goes lower. So that is a valid breakout to the downside of a balanced D-shaped, delta-shaped profile. Once you understand this and really absorb it, you'll begin to see in the future when we have balanced patterns like this, you're going to have an idea of what to be looking for, the clues, and then at some point you'll be able to take the appropriate action. Don't expect that you should be taking the action today or even tomorrow or the next day. The idea is you want to learn about this, absorb it, because you will see it again. I'll absolutely guarantee that you will see it again. So this is going to give you the baseline education that we need. Today it was from a balanced profile. Another day it may be from a one of these other shaped profiles, a Bravo shaped or a Papa shaped profile. And then they'll have their implications. Okay. Any questions about that at the moment? This is a fantastic example. I mean, I got to tell you, the market gives us just, I can't create the classroom in real time. The market does that. So what you want to do then is take this screenshot, which I'll post in a few minutes, put it into your playbook folder. If you haven't created a playbook folder, begin today. Create a playbook folder so you can go back and revisit this over the weekend. Go back and revisit this session as many times as you need to. Nobody on ScrewTube is going to be showing you this. This is how you become a better trader, understanding what's happening in the price action, not just blindly, following somebody and not knowing what the hell you're doing. I don't think anybody here wants to do that anyways, but there are plenty out there that do that. And that's why they're not here. And you're going to succeed and move forward, and they're going to just stay in their rut. All right, so hopefully this helps. Thank you, Mr. Market, for giving us this opportunity to demonstrate a concept that is very highly accepted, understood, and traded by very large institutional players. All right, so this is something that you'll be able to take forward. Let me pass the image along to you. Put it in your playbook. There it is. Breakout template, profile or value breakout template. Put it in your playbook. And this is what I'm going to do. I'm going to put it in my playbook right now. You'll see. Boom. I just put it in my playbook. All right. Value breakout template. You can create a folder. And then what you do there is take actually screenshots of the actual chart today. Throw it into that folder. All right. So here, let's do this. New folder. All right. So profile value breakout. Okay, there's my folder. I'm going to put that file, that image into that folder. So when I go to that folder, I'll have the template that we just went over. And now what you can do is you can take today's lesson about this and then use this as a real-time chart, right? Just, kind of reset it for yourself and then write notes on your chart about what the value breakout, right? So what we would do is this. Take this, all right? Forget about what's going on the chart right now, all right? But take this and do this. Damn, hold on just a second. Why does it? Huh. Okay, 1 second. I have to reset my pen. Just let me refresh my pen. What happens is when I put another screen thing up there, the pen gets disabled. All right, should be able now. No. Oh yeah, here we go. All right, so again, on the right hand side here, we'll use this as an example, right? So we have a delta shaped profile, value high, value low. In the case of breaking to the downside, there's your break to the downside initially, and then we got a little bounce here, and we got a little sideways action right there. Everybody sees that clearly? That, when you move over to the right hand side, what do you see? You see a high volume node. Take a look at your screenshot that I just sent you. Does it look like that? The high volume node? Yes, it does. It is also spending some time there. Not a lot of time, but it's spending some time there. But the key there is the high volume node. And it's not rallying back higher. What has then become the expectation? Prices are going to go lower. It's a shallow, it's not even a pullback, a move down and a stall. High volume, exactly what is outlined in that. And then the market went lower. So you didn't have to sell it on the breakdown here, because how do we know whether or not it that it was going to break down? We did not. It could have easily gone right back up into the range, and then you would have been trapped on the short side. But if you wait for confirmation, volume confirmation of a breakout, yes, we sell it at a lower price, but as you can see, price even went lower. So as I've said so many times in the past, and I'll repeat it, it is not about the price. It is about the structure of the price. And the structure of the price here is telling us Price and volume is telling us that breakout is valid to the downside, and it is more likely now, again, odds, probabilities going lower. So either you get on at this lower price short where the volume is blossoming a little bit, or you're going to be left at the station. All right, so learn about this, understand the structure. You will absolutely see this again. And so what you want to be sure is the next time this unfolds in a similar way, you have an expectation of what may happen, not what will happen, but what may happen given how things unfolded in the past and what you've learned. That is going to be your core lesson for today. Yeah, you're going to be left at the station with Holden Willie. Exactly. Yeah, I had still a little life in me there, Still a little life in it. All right, here we are, 7810s. What are the 7810s? Oh, the line in the sand. Oh my goodness. How did he know? Yeah, the Great Karnak. All right, good enough. So we got the obviously the direction here, of course, should be very clear to the downside. And we'll see if the tens, tag tens. We'll see if that holds. I don't know if it'll hold, but it's line in sand. Okay. All right, Freddie, have a good weekend. Again, Freddie is back in black. Okay, so now you understand. Now we can just simply, we're on the sell side, right? So premiums, staying in alignment, if we get bounces, all that good stuff, right? So everything that you already know. And so in this case, right, and as actually in all our cases, we don't have to guess. We just got to be patient and wait. Wait for the opportunity. It will develop.
Cycle.
John, you're talking about these over here? Get what those are. Hold on a second. See what oh, okay. Hold on a second. not sure how the Sierra chart calculates those. Those particular bars are volume colored, volume based upon color, volume colored based on volume, but it doesn't show the calculation of how they do it. Yeah, one would think that I understand why this one here, this green one here has positive delta. This one has negative delta, and the question is, why is that green? It could be relative delta. I'm not really 100% sure. See, this one's green too, and it's a negative delta. I'm not 100% sure, John. I'll have to look into it, the Sierra chart. I don't really pay a whole lot of attention to that. It's a good question, but I don't really pay a lot of attention to that. I only pay attention to the bars themselves. So I don't really have that answer. I'll see if I can find it though. It's not something that I created. So if I haven't created, I know everything what I've created, but if I haven't created it, I'm not sure of the actual calculation. I wouldn't worry too much about it though. Probably best if I don't have it on there then, right? Well, why do you have it on there? Okay, so let's hide it. Yeah, let's hide it then. Right? We just hit it. Yeah, that's another thing. You know, again, it's a good point. You know, have only things on your chart that really are useful. They're not useful to you, then not a whole lot of reason to have it. so just kind of taking a look at the 5-minute RTH. Again, we were talking about that line in the sand at the 78.10s, right? So we're into that zone now. But you can see this high volume node over here, and this is yesterday's low of value. Right, this is the OPR down over here, and we got this volume cluster right here. So what's happening is price is now entering in the proximity, right, of this volume cluster. So we'll see if this area can hold. Number one, it needs to hold, right? So it's kind of a multi-step process. So auctions coming down, right? It's at the top part of that area right now, but more likely looking for something a little bit of a deeper move into that. And what would need to happen? Ask yourself the question. What would need to happen? What would we be looking for? Again, sellers are dominant right now, right? So sellers are aggressive. They're the aggressor at the moment, right? So do we get renewed buyers where we had a density area yesterday? I don't know. That's what we'll be looking for, right? So how this area responds will be critical to see what the next potential move would be. So we're not trying to predict that. We're trying to prepare that. Where did heavy activity occur yesterday at these lower levels? So we identify that. It's all what we can do at this stage. And then we're preparing for to see what happens today. Maybe there's buyers still there today. Maybe there's nobody there today. All that we know is that's what happened yesterday. Okay? Capiche? All right? But we don't know what will happen today, so but we just identify that area, that low pivot, that zone. And again, price is entering that zone, sellers are still dominant. So what the buyers, if they're active, they need to absorb the sellers before it ever tries to reverse. It must absorb the sellers first. So don't expect an immediate, rally back up. Bounces may occur, but again, I'm talking about a reversal rally. Would not be anticipating that until there's more evidence. Okay? Look to the left. What happened yesterday? This is how you get a good perspective on, price action. Is it fair to say? Yeah, price. Yeah, I would. Yeah, that's fine. Time zone 2. Moves tend to start in time zone 2 when they do. Right? 10:05. Right? Pushed up to the high. Failure to push. Reversal 5-minute, 15-minute, then break. So yeah, within that time zone, John. Thanks, Ron. Right. So we are in good shape today. Yeah, that's my theme song today, guys. Coming into today, running on empty, Jackson Brown. Yeah, I could have a Friday liquidation break. Very possible.